everybody. This is Marshall McDermott, and I want to welcome you to my course, Finance 99, Investing for Your Future. I designed this course with the college freshmen in mind, and particularly the non-business major. Although anyone with an interest can most certainly take this course. This course is designed so that at the end of the course, you will know the basics of investing, and you will realize that you are at the beginning of your journey, not at the end, and you will be able to dive further into the investing world. Gone is the day of working for a company for 30 years and receiving a pension. For most of you today, you will have to take control of your future retirement by planning for it. And the sooner you plan, the better you'll be. Hopefully, this course will set you at the beginning of this path. This is an online course that is divided into 7 modules with a weekly online lecture. We do have a lab, which is an online investment simulator that is also free to use. We also will be using the textbook, The Teenage Investor, How to Start Early, Invest Often, and Build Wealth. Do not let the title misguide you. You may be past the teenage years, but this book is an excellent learning tool. Please see the syllabus for further details. I've got a screenshot here of a show that's called The Squawk Box that's on CNBC. And this show, for you if you want to know, comes on Monday through Fridays at 6 a.m. Eastern Time. But anyway, the reason why I have this screenshot here is because I know the majority of you, when you look at this, this is all Greek to you. You have no idea what you're looking at. And you are, on this screenshot, you are being presented with a wealth of information. And so at the end of our course, you'll be able to look at this screenshot or even watch the show and look at all this information coming in front of you, and you will be able to interpret this information. So just take a second to really look at this and just kind of remember, because at the end of the course you will be able to figure out what they're trying to tell you. Alright, with that, let's go ahead and start Module 1. And here's what we're going to talk about with Module 1. And we're starting out with the very foundation basics of this course. What is a stock? What is an equity? And some of you might have heard the terms common or preferred stock. What is the New York Stock Exchange and NASDAQ? All this we're going to cover in this module. At some point, just about every company, successful company I should add, needs to raise money. Alright, they might need to open up a new office on the West Coast, or they might want to hire some new employees. In either case, the company has two choices. They could borrow the money, or they could raise it from investors by selling them a stake in their company by issuing them stock. So when you own a share of stock, you are part owner of the company, and you have a claim on the assets of this company and every penny that it makes. You now have, when you are issued a share of stock, you now have equity in that company. So, hence the term equities. Equities are the same as stock. So every time you hear the term equities or equities market, they are talking about stocks or the stock market. All right, so let's talk about two different types of stocks. All right, common stocks represent ownership in a corporation, and usually holders of the stock can elect the board of directors and they can vote on policy. However, common stockholders are on the bottom of the priority list for ownership. In the event of a bankruptcy, these stockholders will only receive their money after creditors and the preferred shareholders. These stocks are riskier, but in the long run usually outperform bonds and preferred stocks. And later on in another module, we're going to talk about bonds. So if you don't know what a bond is now at this time, don't worry about it. We're going to talk about it. All right, preferred stocks has a higher claim to the assets and earnings than the common stocks, as we just talked about. Preferred stocks also usually have a dividend, and we're going to talk about dividends later on in the modules also. But basically, what this is a fixed payment that is made to the shareholder. Okay, so as a preferred stock shareholder, you have fixed dividends and appreciation. The dividends could come quarterly, they could come monthly or yearly. It really depends on the corporate policy. And here we've talked about stocks and the types of stocks, but where do you go to buy the stocks? Okay, well, back in the day, back in 1792, 24 stockbrokers signed what's called the Buttonwood Agreement at 68 Wall Street, New York City, and it was outside under a tree. And this created the New York Stock Exchange. So this is a physical place where whatever companies wanted to list their shares for the brokers to bid and buy these shares. So back then, this is where people bought and sold shares of stock. As of today, up till today, some of the world's best known companies list their shares at the New York Stock Exchange. And this was a private organization until the year 2005. And the New York Stock Exchange was acquired by the electronic trading exchange Archipelago. And so now the New York Stock Exchange is called the New York Stock Exchange Euronext, and the stock symbol is NYA. So you can actually look that up, and I'm going to show you how you can look that up. I'm going to have to get off of my PowerPoint slideshow and bring up I'm bringing up Yahoo Finance page here, and notice they have a enter symbol get quotes here, and I'm just going to enter NYA, and notice what pops up is the New York Stock Exchange Composite. I'm going to click on that, and this is what comes up. And over here to the right is the stock symbol NYA. So this is what I'm talking about when we're talking about the stock symbols. I just wanted to show you that real quick. And we're going to go on to the next slide here. All right, some of you might have heard of NASDAQ, which was an abbreviation for the National Association of Securities Dealers Automated Quotation System. So, back in the 1960s, Congress was concerned about the lack of oversight of the New York Stock Exchange by the Securities and Exchange Commission. So, after several years, to be exact, February 8th, 1971, NASDAQ was officially opened. Now, the big key here with NASDAQ is that all the trades are virtual. Now, remember back in the New York Stock Exchange, it was a physical place where they have floor traders, where people are bidding on buying and selling actual shares of stock. However, NASDAQ, it's all done virtually by computer. They don't have a trading floor. So as of today, NASDAQ is a pretty big exchange with over 3,200 companies that trade their shares. Now, you might have remembered several months ago when Facebook did their what they call the IPO, the initial post offering, and they decided to do it on NASDAQ. Alright, so I have several questions here for you that I want you to do some research on. And what is a stock? We talked about what a stock is, and we talked about the difference between a common and preferred stock. And we also talked about where the stock trades are made. So with that, this concludes our Module 1, and I look forward to talk with you